Good morning, everybody. It's Dan Basse and Ben Buckner on the last day of September, the 30th. It's a USDA crop report. We get the final small grains estimates for 2025. And then we also get stocks, if you will, as of September 1st, which will delineate the final soybean and corn stocks for 24-25 crop year. So rather important. The numbers have been surprising over the years. I guess our lean is that if we were to see a surprise in a report today, we'd maybe finding more corn. I only say that is I don't think we're going to keep up with last year's feed and residual number in the fourth quarter. Remember that a lot of cattle were fed on the other side of the border in Mexico. That feed and residual number could be a little lower relative to that. We also feel last year's crop may have been overstated. Ben and I have commented many times about the cash market really never felt tight at the end of summer, and no one had any problem buying corn. So you did have a 1.3 billion bushel end stock total. It seems large. Let me also mention that if you're a farmer, you should be cheering for lower prices in October. Seems rather crazy to say that, but you should, because of course revenue insurance is calculated this month. So if we had lower prices in October and then had a strong rally in November, boy, that would be the best of all your worlds in terms of farm income. USDA likely will be unopened, or let's say closed tomorrow due to the government shutdown. I know Ben will talk that a little bit, but I think that's important. Bulls need to eat, and we're just lacking that fodder for them to chew on. So be aware, play close attention to the charts. I think charts have more meaning going forward. Ben, turn it over to you and kind of lead us down the path of what you're thinking over the last 7 or 8 days.
Yeah, lot in front of us. I think today, probably just given we only have 2.5 hours to trade the stocks and wheat production numbers, that's probably going to dominate today. Chart patterns, of course, can we hold support? It's going to be important. But pretty soon after that, it's all about, does the government stay open or does it not? And so it does seem like we've all seen the stories in the media hurtling towards some kind of shutdown. We've got about 16 hours to figure this out. So it has been less uncommon the last couple of decades, and you can see here that what happened when government funding lapsed, and especially the last 5 lapses in funding did produce shutdowns of 2 to 34 days. So we don't have any way of knowing how long this is. We're not sure what catalyzes negotiations, but we do want to be prepared for the absence of news. Of course, we're not going to get weekly export sales, crop progress, the October WASDE possibly maybe passed off onto November at some point in the future. SNAP payments could be disrupted. So none of this on balance is terribly good for the markets, though we will keep you completely up to date. We're tracking votes, we're tracking cash markets, yield reports, etc. But nothing officially will be published, and I think that's the big risk. I mean, we all know that bull markets especially do need to be fed on a daily, weekly basis. And so just not having information may work against that, especially given it's October and seasonal trends aren't terribly positive anyway because of harvest. That is not terribly insightful. But we do want to be prepared for an unknown duration that probably the federal government does shut down. So 40% of the workforce furloughed, very, very disruptive to a lot of things, grain markets included. Jumping into fundamentals, and what's staring at us in the face, I think, is simply harvest progress. And this is not unknown. We know that it's accelerating and is expanding north and west. We're going to get a lot of new yield data over the next week and over the next 30 days. Weather forecast, yields are what they are now. It's still very dry. It's still very, very warm, but I do think this does keep harvest pretty speedy. This is no 7-day forecast. Maybe some very short disruptions in the upper Midwest, but otherwise really nothing of note for the next 10 days. Temperatures in the 80s, no hurricanes, which is a positive. And so that makes sense that this is colliding too with what is normally the time of year that harvest starts to surge. So we all talk about harvest pressure, we're getting yield reports, but it's been kind of slow moving, which is pretty common during the month of September. So, 18% done on corn, 19% on average, and 19% harvested on soybeans versus 20% on average. So this is all pretty normal, par for the course. But I just wanted to focus on these graphics, and you see what happens about August 5th, 7th onward. So it really starts to accelerate. We're going to gather the next 60% of the crop in the next 30 days probably. So how do cash markets react to that? I think is going to be important, especially given if the government is closed and we don't have crop progress data. And I don't know if it will be as simple as this, but I do think we want to be prepared or acknowledge just kind of the sheer volume of bushels of corn that are coming at the market. So, 18% harvested on our estimated yield of about 185 bushels per acre. It's exactly 3 billion bushels of supply gathered using NASS data. That is down about 100 million bushels from last year. So we're not the cash pipeline is filling up pretty fast, but just wanted to communicate that total supply is still down year over year. This starts to change next week. So, assuming the normal evolution, we'll probably harvest another 10 or 12% this week, and then 18, 19% the following week. We're going to start to exceed year-ago levels of corn harvested by 100, 300, 700 million bushels moving forward. And so it's that last 25% of the harvest, especially, is just philosophically asking the question, does that corn have a home? Does it have a place to go? We can store it to a certain point, but just wanted to be prepared that at some point, corn's going to be kind of piled upon the ground, most likely, given, I think, even yields as low as 182 nationally, those estimates. And with the stocks reports, as soon as you think you figured out some residual disappearance model, the opposite happens. But there haven't been many surprises in the last couple of years. So we think we'll add, 25, 50 million bushels corn stocks, soybean stocks, maybe a little lower than USDA's last forecast. But none of the cash market showed us anything remarkable. And anecdotally, we just heard that, like you mentioned, Dan, it was pretty easy to buy corn in August. And so is that telling us something? You can see on the left basis, Cedar Rapids, Iowa, one of the larger corn processing markets on earth, kind of option for really the second half of the marketing year almost. And that's not telling us, I think, that corn was in short supply in the central western corn belt. Soybeans as well, kind of disappointed in the performance basis in the central Midwest, Illinois particularly, where you had a normal seasonal break. Never really got above 15 over during July and August, and now we're 25, 30 under. So this is just not painting the picture that there is a big stocks surprise looming today. So maybe this report, like the last couple of quarterly reports, kind of dull. So we want to be ready for that. And kind of lastly, just as we move to the southern hemisphere, the monsoon in Brazil, kind of like it always does, kind of back and forth, starts to sputter in September, probably comes back in October. But Argentina has been a surprise. Just the sheer amount of rain that they have gotten since the middle of July. You can see here, these are soil moisture anomalies as of September. Very, very wet across really the critical parts of corn, soybean, and wheat production, kind of where Cordoba, Santa Fe, and Buenos Aires meet, 70% better than normal. So the Buenos Aires Exchange 2 this morning, estimating corn production. It's very early. We will revisit this every month, but their forecast today is for 58 million tons. That is up 8 million tons on last year and 5 million tons above the USDA's forecast. So we want to follow this closely, but is Argentina kind of the big supply threat if they don't have any adversity between now and really the latter part of this calendar year? So I think fundamentally we're still looking at weighty cash markets. We can all see the charts. Those are looking a bit heavy. Do we get a surprise today? And what do you do with it? Like we have talked about, I think risk management is key to this. Lots of bushels coming at us in the next month or so.
Good rundown, Ben. I would agree. I think as we think back at our theme at Ag Resource, we've been selling rallies. It's really where we've been going all the way since late last year, since February. And so our mindset is still there. And there's three reasons for that. Again, a record corn crop, China's absence in terms of being a U.S. soybean importer, and we think that'll persist. And then the record wheat supplies in the hands of exporters, global exporters. Those are the 3 points that really come home in terms of keeping these markets somewhat under wraps. So good luck with the USDA report today. We wish you well, and we'll see what happens, and we'll be back tomorrow to discuss it. Have a great day, everybody.